Hello, everybody. Happy Thursday. Bitcoin is at $27,500. And we're going to be talking about 4 new price targets. We're going to be talking about demand and a whole bunch more. But really, this is about a video about perfect inelasticity or once in a species. And by the way, you are the species and Bitcoin is the once. We'll talk more about that in a minute too. So I do sound a bit eccentric today, but it's a good day and I love doing these types of videos. And of course, I guarantee you, every video you will learn something new. So if you want to get smarter, hit subscribe. We had over 100 new subscribers yesterday because of my video, which also was quite controversial. Zeno, I see you out there. Thank you for coming. So let's go. The story, yes, it's a Bitcoin story and an interesting one. But basically, I'll go through 4 new price targets at the end, how we got there. One of them is not mine. Also, I'll talk about perfect inelasticity and the reasons why I've always been obsessed with Bitcoin. The penny dropped because I like hard assets. But the beauty of perfect inelasticity is how no matter how much demand increases, there is no increase in supply. It's programmatically fixed. Mr. Hammer, thank you so much for being there. So regardless what happens, you can't mine more, you can't dig more, you can't go to an asteroid and find more. But it's interesting. So first of all, I want to credit the inspiration to the Substack I subscribe to called Once in a Species. It's where a Stanford MBA helps you understand Bitcoin. Well, Stanford MBA meet Wharton MBA. The battle of the MBAs. And also, shout out to Sanjay, who asks all the hard questions. So these are the gentlemen here behind this. And also, 14 years ago today, guess what? This is fascinating. Exactly 14 years ago, on the 5th of October 2009, one Bitcoin was worth more than 0 for the first time in history. So for $1, you could have bought 1,309 Bitcoin. And ever since then, it's been up approximately, give or take a couple of percent, 3.6 billion %. Imagine dropping $1 and getting 1,300 Bitcoin. Wow. Anyway, fun times. Let's talk about the asset spectrum before we start digging into numbers and demand and economics and all that good stuff. So this is the asset spectrum, and I want to walk you through this, and I want you to guess which ones I like. First of all, you've got your consumption, your spending of money. Then you have your depreciating assets like vehicles, buildings, equipment. Believe it or not, buildings are depreciating assets. Then you have your inflationary assets like fiat currencies. We'll talk more about that later too. Airline miles, interesting category. And then you have your scarce assets, gold, land, some art and collectibles, not NFTs perhaps. Then you have your equities, and you have scarce equities with limited supply, with real returns or growth. And finally, you have Bitcoin, the scarce asset, with increasing scarcity and early stage growth. Those 3 factors are so important. Now, guess which 2 classes I like and I exclusively pretty much invest in? That is scarcity and growth. That's what this channel is all about, because when you have those 2 factors in your back pocket, your results will be good. It's just programmed. It's numbers, it's mathematics. So let's look at some Bitcoin CAGR going back in time. CAGR is compound annual growth rate. So if you dropped $1 into Bitcoin 13 years ago, you made 174% compound annual growth. And you take $1 and you multiply it by that factor for 13 years, you have a huge pile of cash at the end of the day. Okay, so if you started with 6 cents, now you got $30,000. 2012 halving, if you started with $12, now you got $30,000. Well, the price now is $30,000, and you would have had 108% compound annual growth rate if you started in 2012. 2016, if you started then, you would have had a 71% compound annual growth rate over the last 7.1 years. And 2020 halving, 3.3 years so far in, you would have had about 3.5 years in, a 45% compound annual growth rate. Okay, so it started at 9K, it's up around, say, 27.5. We're just approximating 27.5, 30,000. This is the chart that I pulled from our friend Once in a Species. The point is, there are diminishing returns, but there are some things happening as well that will change things. So we are facing diminishing supply combined with increasing demand. And I'm wondering, could CAGR change? And that's part of the analysis today as well. Let's go and look at the Bitcoin halving block rewards. So it's a bit of an eye chart, but basically we're at 2020 halving cycle right now, where the block reward is 6.25 Bitcoin per block. And the Bitcoin miners mine 210,000 Bitcoin, or 210,000 blocks every 4 years. That's equal to 1.312 million Bitcoin. And next cycle, that'll be halved. So the reward will be 3.125 instead of 6.25. And the amount will be 650,000 over the next 4 years, or about 164,000 Bitcoin a year, starting in April 17th, 2024. And all the miners will be fighting over that 650,000 Bitcoin. So it is becoming real scarce real fast. And that's the intriguing part of this asset. Now let's look at where we are. A little map. You are here, that little box there in the middle. There will only ever be 21 million Bitcoin. And as you know from this channel, 5 million are lost. And annual issuance keeps going to zero over time. We'll break down the actual amount of reward every year per human as well in a minute. But first of all, let's talk about Metcalfe's law. And for the assumption of this video, I assume demand remains equal. Okay, not growing, equal. But a big part of this is not only diminishing supply, but also increasing demand. And Bitcoin's rising value is driven by its ever-increasing scarcity, and it becomes an inevitable cycle in game theory. As its supply dwindles, more people become aware of it. It becomes a hype. And then the demand for Bitcoin will naturally grow. And this is per Satoshi Nakamoto, February 18th, 2009. As the number of users grows, the value per coin increases. It has the potential for a positive feedback loop. As users increase, the value goes up, which could attract more users to take advantage of the increasing value. That's it. Everything that Satoshi ever did is simple. And there's an absolute beauty in simplicity. So let's move on. Let's talk about the amount of assets in the world and how much Bitcoin could garner. Currently, it's 0.06% of all assets, which is actually, I said there'd be no nothing burgers. That is a nothing burger right now compared to other asset classes. Residential real estate, 320 trillion. Bond market or global debt, 320 trillion. Equity, 120 trillion. Land, etc., etc. Gold, 12 trillion. Some people say it's 13, etc. Some people say it's 11. So I anchored on 12, and it has been going down in price. And silver, 1.3 trillion. So next in the box will be Bitcoin surpassing the market cap of silver, which it got real close to not too long ago. Anyway, actually it did surpass it, I think, last time around. Let's talk about Greg Foss for a second. This is the first model, and kind of you can take this, bake in your own assumptions. What I like about it, it's very simplistic, and it talks about how much Bitcoin could garner of the global asset class. And in this analysis, Foss assumes 5% allocation towards Bitcoin of the 900 trillion in total assets. And you divide that by 21 million, and you get about $2.14 million per Bitcoin. So 5% of 900 trillion is 45 trillion. Divided by 21 million, you get the $2.1 million per Bitcoin, which sounds kind of crazy. But what I love what he does is he takes an EV calculation, expected value. If you assume there's a 90% chance that Bitcoin goes to zero, and you assume there's a 10% chance that Bitcoin goes to 2.1 million, your expected value is $210,000 today to invest in this asset. So that's just the first one. So think either, it doesn't go to zero, it goes to 2.1 if it garners 5% of global assets of the world. And I think that's too much at this stage, but perhaps at a stage in the future, we shall see. But you can always compare it to all the other assets as well and determine exactly how far it'll go. Next, we're going to talk about a little bit of economics that I kicked it off with, and this is the story today. We're going to measure actual demand and match that against decreasing supply over time to come up with price calculations. So, supply versus demand, the price is set at the intersection of the blue curve, which is supply, and the red curve, demand. And the inelastic supply of Bitcoin, again, unlike other commodities, Bitcoin does not increase based on demand. No matter how high the demand is, no new Bitcoin can be created. And this is in comparison to other things like diamonds and gold and oil. You just need to dig deeper if you want more. And that makes it a little bit more expensive, but they are not exactly scarce. And again, it's all programmed in a supply schedule. Now, let's look at this chart and map it to halving cycles, which is really, really pretty. So here, this is the current supply, again, fixed. How much hits the market? It's determined in that epoch 2020 to 2024, which is 6 months away from being over, ladies and gentlemen. 6 months is not a lot of time. Now, let's go ahead to the next halving cycle. This is 2024 to 2028. This is the one we're going into. You can see the way the quantity sold has shifted to the left. It basically became half. And again, as Bitcoin supply rate decreases over time due to the halving events, its demand will continue to grow because the price will go up, more people will know about it, and this growth and demand will be attributed to increased awareness, adoption, education, and strengthening of the Bitcoin's network effect. So what happens then after this? Well, you guessed it, 2028 to 2032. Again, the supply is halved again. And what happens now? So what I did was I backed into the actual demand today, and I assume it stays even over time out through 2028 and see the impact on price. And then we'll talk about the impact of spot ETF and BlackRock and everything else. So bear with me. First of all, let's look at the actual halving rewards. A reminder for everybody. So the reward per block is today at 6.25 Bitcoin per block. As of April 2024, it'll be 3.125 and half and half and half and half. All the way out to say 2040, it'll be 0.19 of a Bitcoin will be the reward. Now, the amount per cycle, this cycle we're in right now is adding 1.3 million Bitcoin to the supply. Starting in 2024 to 2028, it'll only add 656,000 Bitcoin to the supply, and on and on and on. But the amount per year is only, for example, starting in April 2024, will be 164,000 Bitcoin a year. And I decided to do a little fun calculation. How much Bitcoin is that per human per year? So currently we're at the 0.00004 Bitcoin per human per year. Starting April, it'll be 0.00002 Bitcoin per year. And that's why I stress it's like having one whole coin is going to be massive in the future. So hence I've been talking about whole coiners since I started this whole thing. Now let's look at the actual demand and dollar amount and break it out, okay? So today, assuming there is $900 million worth of demand per month, and that's meeting $900 million of supply. If these two are equal, the price will remain the same. But in April 17th, let's call it May 2024, that's going to have the supply. Now, if the demand remains 900 million, what'll happen to the price if the supply is only 450 million? And that was the question I had for myself. So let's break this out and see exactly what happens. First of all, another table. It's all numbers, but that is the name of the channel. But Bitcoin minimum monthly gain post halving. So the demand per month is $900 million worth of Bitcoin. The supply will be $450 million. And you know I use my multiplier to determine exactly how much, if that money flows in every month and it's missing the actual demand, I divide that demand of 11.25 billion divided by 15 million Bitcoin, because 4 to 5 million are lost, and you get $750 in Bitcoin price increase per month. Now, assuming the Bitcoin price is exactly where it is now, 27,527, what happens if just $750 of price is added to the Bitcoin price for the next 48 months after the halving? Then we get this chart. Now, it's smooth as linear. It doesn't assume bear markets. It's just, nothing goes straight up or straight down. It goes like this. But this, just for simplicity, this will take us to if demand remains equal, which it's not going to, because Bitcoin's going to get more and more popular. And I'll talk about the very last slide, and I'll explain why it's going to get very popular very fast. But assuming demand remains equal, that'll take us to a $65,000 Bitcoin as of April 2028. That is the impact of adding $750 to the price every month for 48 months. Okay? I know a lot of people say, oh, I'm not very excited about that. But there's more. So enter Wall Street. All right. We just heard actually yesterday, one of the senior executives from BlackRock said they will get that spot ETF in the next 3 to 6 months. As I said, it has to be before the halving. BlackRock don't want to come in after the halving. They know that's when the fireworks go off. Especially if they're watching this video, they'll be extra eager to give Gary a call. Hey, Gary, can you just rubber stamp that thing for us, please? Anyway, let's walk through the AUM, the assets under management for all these names. Fidelity, Schwab, Citadel, Deutsche Bank, BlackRock, Nomura, Franklin Templeton. These are all firms that are building a Bitcoin practice today. Their total assets under management is $25.22 trillion. Now, if they just allocate 0.5% to Bitcoin, and I have two assumptions to this. One is they allocate 0.5% to Bitcoin, which is $0.12 trillion over the next 4 years. That becomes 126.1. Or if it's a monthly allocation over 4 years, that's $2.62 billion a month. If it's a monthly allocation over 1 year, it's $10.5 billion a month. These are the extra demand that I'm putting into the equation, and I'm going to put that into the model and add that to the price to get some new price predictions based on the impact of the money coming in. And everybody knows it's pretty much a no-brainer that 0.5% will be allocated. The question is, how long will it take for that to come in? That $0.12 trillion, which is a nothing burger to these companies, but it's super, super conservative. So let's jump into the first scenario. This is, again, a smooth line. Again, they allocate 0.5% of their assets under management to Bitcoin over 4 years. Okay, that'll take the price of Bitcoin to $278,000. Again, just 0.5% of their assets under management allocated gradually, drip, 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 every month. That means they will be getting, per this, about 2.6 billion a month, and that's on top of the existing demand of half of 900 million. And that's assuming demand remains equal, which Satoshi said it's not going to. It's going to go up because people will see the price action and people will see the state of fiat currency. So that's the first scenario. Okay, $278,000 by April 2028. Second scenario, they don't do it over 4 years. They allocate 0.5% of assets under management that many believe they will probably do, very easily do, especially with the connections to pension funds, etc., that need some type of alpha to dig their pension funds out of a hole, or else they're just going to go backwards and become defunct. This is the assumption that 0.5% of asset under management goes in the first year from April 2024 all the way up. If this happens just for that first year, the demand will spike the price of Bitcoin by April 2028. And again, assuming that 0.5% allocation happens in the first year, another 0.5% in the second year, etc., etc., that'll take us to the price of $920,000 per Bitcoin in the year April 2028. Again, it's a stretch, but again, it's not far from now. I do believe we'll be somewhere between this, which is $278K, and this, $920,000. But let's talk about one other thing that's happening at the same time, because we're talking in dollars, and a dollar will not be a dollar. So that makes these types of numbers even more believable. Let's look at what happened over the last couple of weeks. This is from Charlie Bilello. The US government, US national debt, increased by $2 trillion since June 2nd, 2023. All right, now if you calculate that increase, which ultimately will turn to debasement of the dollar lost 6.3% in the last 16 weeks. Debt went from 31.46 trillion to 33.474 trillion. These are just numbers. That debt will hit the market, and that debt debases fiat. The rate at which that happens, we're not sure, but this is only going to accelerate. 6.3% debasement in 16 weeks. Think about that. And they're paying you 5% on your treasury for a year, and you're debasing 6.3% in 16 weeks. Doesn't make any sense to me, but maybe to other people. So let's go. And by the way, they have removed the debt ceiling until 2025. They're going to spend like there's no tomorrow, unless, of course, somebody can stop them. But remember, there's like 200 trillion in unfunded liabilities, so the money will be printed. It's just going to happen. The question is how much, how fast. So let's get back to the quick conclusion of this video. Let me know if you like it. A lot of numbers, but numbers are fun. The assumptions here, worst case scenario based on demand. This is assuming demand remains equal today and the halving cycle hits and over the next 4 years. Worst case, Bitcoin goes to $64,166. Now, the IA expected case, assuming demand remains equal and Wall Street allocate half of 1% of their assets under management, which is 25 trillion, to Bitcoin, price will go to $278,000 a Bitcoin by April 2028. And the bull case, assuming demand remains equal, but Wall Street allocate half of 1% per year of their asset under management. So first year is 0.5%, second year will be total 1%, third year 1.5% in total, and fourth year will be 2%. So it'll just be 2% of assets under management at April 2028. Bitcoin gets to $920,000. But remember, price is made at the margin. If the long-term holders do not sell their bags, price will just go straight to the roof. So, Forest Fund, thank you so much for being here. Thank you to the mods in the chat, everybody. As we say, all roads lead to Bitcoin. This thing is so scarce. It is such an exciting economic experiment we live in, not only with the way in which governments are printing fiat, but the way in which the halving cycle happens. Okay, we're very fortunate to be here. Be grateful, stay healthy. Thank you all for coming. All roads lead to Bitcoin. Thank you to everyone on Patreon. And I'll see you all tomorrow. It's Friday. Can't believe the week has gone so fast. Take care, everybody. Take care of yourselves. Take care of your families. See you tomorrow. Bye.